evening, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at one of the most important and, in fact, one of the largest sectors of the Trinidad and Tobago Stock Exchange. Of course, we're speaking about the banking sector, and one that is critically important in terms of providing that necessary funding to both consumers as well as businesses alike in getting economic activity started and continuing across the domestic economy. Now, one of the most significant developments over the past couple of years would have been a decline across the stock market, actually 3 consecutive years of declines, and the banking sector did not or was not spared. But let's take a look at what investors might expect for 2025 at the sector level as well as individual security level, and why banking stocks might be a right fit for your portfolio in the year ahead. Now, let's get straight into it. And as we can see, in terms of total a percentage of market capitalization by sector, the banking sector is by far the largest sector on the Trinidad and Tobago Stock Exchange, accounting for over 56% of the total value of stocks on that Trinidad and Tobago Stock Exchange, of course, followed by the conglomerate sector at 21%, non-banking finance at 10.4%. And we have manufacturing sectors 1 and 2, energy and other and trading rather at less than 5% or 5% or lower. So significant in terms of the composition of the overall value of stocks traded, and of course it would have a significant implication on the direction of the stock market overall. When we take a look at the constituent members of the banking sector, we can see that they are all included in the top 10 stocks by value on the Trinidad and Tobago Stock Exchange. So, for example, just to put the sheer size of some of these banking stocks into context, Republic Financial Holdings Limited, for example, accounts for just over 18% of the value of stocks on Trinidad and Tobago Stock Exchange. And again, for some context, Republic's market capitalization or market value is worth more currently than the combined value of the Antimacal Group, as well as Massey Holdings Limited, two quite significant regional conglomerates involved in many business sector activities across the region. So that just puts into scale the size of the banking sector constituent members. We, of course, have CIBC Caribbean as well, First Citizens Group Financial Holdings, Scotiabank Trinidad and Tobago, as well as the NCB Financial Group. So some very significant heavyweights comprising that banking sector. And of course, their individual stock price direction would have a cumulative effect on the direction of the overall Trinidad and Tobago Stock Exchange various indices as well. Now, in terms of banking sector performance, well, as mentioned, the past 3 years have been quite challenging for the Trinidad and Tobago Stock Exchange in general. The banking sector would not have been spared, down 13.3% in 2022, 7.5% down as well in 2023. And follow that up with a 10.4% decline in terms of the banking sector's market cap or market capitalization in 2024. Now, for 2025, looking at the individual components of the banking sector, as well as considering the macroeconomic environment, well, Bourse projects that the banking sector should have some modest recovery of around 6.5% in terms of its value, moving back from a market capitalization of 57.5 billion at the close of 2024 to 61.2 billion projected in 2025. And that's on the heels of certain industry level factors such as modest revenue growth, relatively stable relatively stable efficiency ratios, relatively stable operating margins, etc. And of course, a fairly attractive dividend yield on offer that will be on offer to investors, which should provide some support for banking sector stock valuations. Now, when we talk about dividends, as an example, Bourse would have created a stylized portfolio comprising one of each of those stocks on the banking sector, and in that portfolio, we would have assessed what those dividends historically would have been paid over the course of each calendar year. Now, as you can see, in terms of total dividends per share in that orange column, there has been a continuous growth in dividends being offered by continuous absolute dividends and growth being offered by the stylized portfolio comprising one stock of each of those banking sector constituent members, growing from $6.71 over the portfolio in 2020 to $11.35 in calendar 2024. And for 2025, it's projected that total dividends from the stylized portfolio should grow to around $11.97. Now, what does that offer to investors on a return on invested capital? Well, in 2024, the dividend yield on this portfolio based on your invested capital would have been around 4.7%. For 2025, we expect it to remain relatively stable at 4.6% for this overall portfolio. And of course, there would be some divergences in terms of performance going forward on a security level basis. Now, what does that look like in terms of the price projections and those dividend yields that we spoke to you about recently? Well, for example, Republic Financial Holdings Limited, after that market cap of around 18.6 billion, is rated an overweight by Bourse at this particular point in time with a stable outlook. And based on our performance projections, or financial projections, we expect, for example, that Republic will continue to offer a dividend yield of around 5% with its continued growing earnings and on a forward earnings basis, and for 2025 would end up within a price range of around $124 to $128 per share from its current level of around $113 per share. So there is some upside in terms of price performance, as well as a fairly generous dividend yield as well, having considered all of the factors permeating the Trinidad and Tobago economy at this particular point in time. First Citizens Group Financial Holdings, or FCGFH, for example, also rated overweight with a forward earnings dividend yield of around, of around 5% with a price target range of around $47 to $51. CIBC, NCBFG, and Scotiabank all rated market weight with some stable to modest price increases. Well, in the case of CIBC, we expect it to trade down to around $8 per share with a dividend yield of 4.4%. But of course, CIBC pays its dividends in US dollars, and NCBFG on the lower end in terms of dividend yield, but still offering a relatively attractive 3.6%. In absolute terms, Scotiabank with a forward dividend yield estimate of around 5%. So overall, for investors looking at the banking sector, is it right for your portfolio? Well, think about the large size of the portfolio or the large size of the constituent members, the fairly generous dividend yields, as well as some opportunity or potential for price appreciation, even in what can be considered relatively muted economic activity or economic performance in the near term. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website, boursinvestment.com, where all of our research is absolutely free. And you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.